Momentum Coin's future doesn't hinge on a single factor. It's shaped by a web of internal mechanics, market forces, investor psychology, regulation, and competition. Understanding these layers gives a clearer picture of where MMT could go next and why its price could dramatically rise or suddenly fall. At the center of Momentum's potential is its evolving tokenomics. The upcoming VE3.3 governance model is designed to tighten alignment between long-term holders and the protocol's revenue. This model rewards those who lock their tokens, and the buyback program takes protocol-generated revenue and uses it to purchase MMT from the market before redistributing it to VE-MMT holders. Every buyback cycle pulls tokens out of circulating supply. If the protocol continues generating meaningful revenue, this supply reduction becomes a strong structural catalyst, increasing scarcity and creating upward pressure on price. But the effectiveness of this mechanism depends entirely on consistent usage and demand for the platform. Without that, buybacks become symbolic rather than impactful. On the other end of Momentum's token economy is the unlock schedule. While a large percentage of the supply is locked early on, these tokens will begin unlocking in phases. Unlocks always introduce the possibility of sell pressure. If early backers or private investors choose to take profits, the market could feel the weight instantly. Whether these unlocks turn into real selling pressure will depend on market conditions at the time, the confidence investors still have in Momentum's long-term trajectory, and whether new demand is strong enough to absorb the released tokens. In bullish environments, unlocks are often overshadowed by growing demand. In fear-driven markets, they can amplify a downturn. All these threads, tokenomics, ecosystem growth, market sentiment, regulation, competition, institutional backing, technical signals, whale activity, and unlock schedules weave together to determine where MMT is headed. Momentum Coin's future price will likely hinge on whether the protocol can generate real, sustained revenue to power its buyback engine, how well it manages selling pressure from unlocks, and whether it can capture a meaningful share of the rapidly growing Sway ecosystem. If the platform continues gaining traction, regulatory clarity deepens, and sentiment improves, MMT could find itself in a position of strength. But if market conditions remain weak or the project fails to differentiate itself, these same factors could turn into headwinds that slow down growth or push the price lower. Momentum's future isn't predetermined. It rests on execution, timing, and the market's willingness to believe in what the project is building. And in crypto, belief backed by consistent fundamentals is often the most powerful price catalyst of all. Momentum Finance, a new decentralized finance platform built on the Sway blockchain, officially launched its token generation event on November 4th. Backed by major investors including OKX Ventures, Coinbase Ventures, and Circle, Momentum is designed to serve as the Sway ecosystem's central hub for liquidity and governance. The project runs on Sway's high-speed move architecture, offering faster and more efficient DeFi operations. Momentum brings together decentralized exchange, DEX, trading, yield generation, and cross-chain participation through integrations such as Wormhole. Shortly after its debut, MMT secured listings on several major centralized exchanges, including Upbit, Gate, KuCoin, and Binance. Momentum's MMT token launched yesterday, marking the most crucial step in the platform's growth. Users can use MMT through ecosystem integrations, starting with Binance Hodler airdrops, which reward users via retroactive BNB Simple Earn subscriptions. MMT serves as Momentum's governance and incentive token, allowing holders to bond tokens into vested MMT to gain voting rights, boost rewards, and gain early access to new yield opportunities. This system reflects Momentum's adoption of the VE model, which is designed to reward long-term holders while decentralizing governance and more efficiently directing DEX emissions. Momentum will transition fully to the VE model post-launch. It will introduce a reward system where VE-MMT holders earn a share of DEX trading fees based on their lock duration, aligning incentives for long-term supporters. A dedicated platform for MMT and VE-MMT holders is also in development. This platform will enable users to bond, vote, and track rewards seamlessly. The Momentum team notified users that the allocation is in VE-MMT, which will be visible in the next few days. Momentum title deed holders will receive their airdrops 3 days later instead of at TGE. While the reaction to the airdrop has mostly been positive, not all are satisfied with the allocation. One of the biggest objectors is Ronin, who claims he was deemed ineligible despite depositing more than $100,000 in the Hodler program and onboarding over 1,000 users. The price of MMT surged immediately after launch, rallying by more than 4,000% to a new all-time high of $4.47. While the rally was substantial, the price of momentum did not sustain it. Instead, it created a lower high and has since fallen by 70%. Momentum's decline ended at the $1.20 horizontal support area, triggering an ongoing bounce. Another positive sign is that the price has broken out of a descending wedge pattern that has existed since the all-time high.